And there we have it. Yeah, we're back again. All right, so let me see. And I can totally see. All right, now we're good to go. All right, back again. That's always fun. Always fun. Hate when that happens. All right, why is that black now? That's not right. It's not supposed to be like that. Okay, that's right, that's right, that's right. Let's get out of that. Let's get out of that. Let's get out of that. Let's open this bad boy up. All right. That looks about right. All right, let's get rid of you. Okay. I hate when the computer freezes. Oh, do I hate it with a passion. Don't want that. And here we go. Let's wait for this to open up. Okay, what are we looking at? We're waiting for this thing to load up again. Now, I usually have this all set up, all ready to go beforehand. But can I do that today? No. Why is that? Get rid of that one. Okay, now we're talking about options today. This, if you are, or if you're part of the group, this is what you're going to be getting in the mail, in your emails. And here we go. Let's sign in. Let's see if I get this right. People bothering during my broadcast. What a wonderful thing. Good thing this is just practice, because, you know, we're just practicing until we get all these details done and over with. Once the details are all done, then we won't be bothered by people. So it's 9:30. Half the show is just about over now, but we're going to keep continuing, and hopefully this will look better. Okay, so here we are, that, and let's see what the broadcast actually looks like. That's that one. I don't want that. I want this one here. Click on here, and it's still not showing anything. Okay, so it's live. There we go. Now turn it down a little bit lower. That's a little bit. That's lower right there. Now, why is it still showing blank? Okay, so this is not a good thing. Health stream. Stream is healthy. Stream health is in excellent condition. Undefined. No data. Blah blah blah. I don't even know what all that crap means. Now this here, video output low. YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience buffering. That's not good. I might have to See, that's not good. Video output is low. Okay, so video output's low. Now I get a little bit higher. One person watching, and I'm going to apologize, because I'm going to have to get me a cable so I can go directly into the box. That way we're not getting, what do you call it? All right, so let's get back to where we were. Basically, I'm going to start all over again so we can find out what we're looking at. Now, today's date is, it's 9:30, Thursday, December 22nd. Now, we all know I like to go 10 days prior to, so that would be on the 8th. Or, yeah, for anything trading today, we would be looking at the 8th. And here we got 17 companies we're looking at. Now, just for the fun of it, let's see what happened. HIW had a high of 55.93 back in July 27th. The low, January 19th, 38 bucks. That's a big spread. The last 90 days we're looking at the high back in November, the low high back in October 26th, low in November 10th, and from the 22nd, 10 days prior to the 22nd, would have been the 8th. So what did she look like on the 8th? Here's the 8th right here. Now, HIW had an 80-cent dividend. Did it make the 80 cents? It looks like it did, because look at that nice little up move. Okay, so opening, HIW was 49.12. The high was 49.65. It didn't make it on the first day. Okay, so 49.12 and 80, which would be our new target price, would be 49.92. Didn't make it on the second day. The third day had a high of 49.90, and the fourth day the high was 50.29. So it made it on the fourth day. So you got your dividend 4 days out. Okay, next one, EQR. EQR. Now this is like a total downer. Now I usually don't like jumping into stocks that have a downward trend. Now I like them to going sideways or going up slightly. But this looks like a total downward trend. But we're going to look at it anyway, just for the time being. The high back in December of last year, coming into the new year on the high of 81, almost $82. The low, beginning of November, or the middle of November, the last 90 days, she looks like she's going sideways with a nice little uptrend right from the end of November. So we're looking at on the 8th. Okay, here's 8th. We're looking at a 50-cent dividend. The 8th, she opens up at 62.29. High of 61.10. Sorry. Opened at 62.29. The high was 63.10. That is basically your whole move right there. So you get your 50-cent move right there. So you have it in, out within 1 day. Your trailing stop, you would have had it probably called out somewhere on the next day with a high of 63.74. Let's jump into IVR. IVR is the next one. I'm only gonna do like 3 or 4 of these because we are kind of running late because of the problem, the technical problem I had the first half. So IVR has a 40-cent dividend. The high of the year for IVR was September 7th, first week of September. The low was the first week of February, or the second week of February. Last 90 days, this thing's been going sideways. I love sideways. Sideways is a good thing. Let's jump at the 9th. Sorry, the 8th. See right there, looking at the 8th. 6, 7, 8. Okay, IVR is a 40-cent dividend. She opened up at 15.59. So that means we'll be looking at 15.99 for the 40-cent move. Didn't make it in the first day, didn't make it on the second day, but it did make it on the third day. Although the third day is red and it's a down day, which means it opened higher than it closed. Okay. However, even though it opened higher at 1578 and it closed at 1575, it still made the high of the day of 1604, which would have given you your 40-cent move, which is in 3 days. All right, one more, and then we're done. Done looking at these. We're going to go into the future. We're not going to look at the past anymore. BCPC. All right, BCPC. All right, the high of the year was beginning of December. The low of the year was the end of January. Last 90 days. We're looking at a low right here, beginning of November. Oh, look at that. Coming into the election. You're going to find that when you see there's a lot of turning points on charts. The biggest turning point on a chart is 2008, because they had that big, huge financial crunch back in 2008. So you have a lot of movement from 2008 to where we are now. But for this year, the biggest turning point is the first week in November. You see right on the 7th and the 8th of November, stocks either shoot up or they go down. This one right here, you get the week coming into the election. You got 5 down days in a row. It's 1, 2, 3, 4, 5. 6 days in a row, down days. Even on election day, it was down. Trump gets in the office. Look what happens. The thing jumps from 63.39, and you got 4 up days in a row, all the way up to 78. 63 to 78. That's a $15 move in 4 days. Goes sideways for a little bit and shoots back up. Okay, so BCPC, we're looking at the 8th. And there's the 8th right there. We're only looking for 38 cents. Okay, she opened up at 84.92. And she hit a high of 87.48. So my thought is yes, most definitely. All right, now Thursday. Today being Thursday, we like to go over options, because that's what we like to concentrate on Thursdays. So we're going to jump ahead of the game, and we're going to look at 10 days in the future. Okay, so today's the 22nd, so we can't do anything for today. So we're going to do something tomorrow. So 10 days from the 23rd would be the 6th of January. Wow, they don't have very much for the 6th of January now, do they? That don't seem right. Let's see who they have for the 5th of January. Ooh, MasterCard, ROP, UVV, BANR. That's MasterCard right there. Okay, now we're not going to do this bottom one because the bottom was only 7 cents. I don't even want to look at that one. So UVV, that's the first one. Okay, as a high, which was this week. That's not good. And, well, the high this week was 64.20. The low was the second week in January. Last 90 days. It's just ridiculous. And here we are around the election day. Just for fun, what does it look like? The 8th doesn't do very much, which is the next day. And then a couple of days. That's crazy. Look at that. That's a big move on that day. And the very next day, it gapped up high. It, gapped up, but then she dropped down. Okay, let's take a closer look at that one so you can see. Okay, let's move back just one day. All right, here's election day right here. Wait a minute, that's the day before election. Election day was the 8th. Okay, Trump gets voted into office the very next day. She opens up at 54.40 and shoots up to a high of 58.50. Okay, what happens then? She closed at 57.25 right here. And then she gaps up the next day to open up at 57.80. But Trump is the president-elect, so this baby shoots down and settles down around here. All right, so where are we? We want to look at, what were we saying? The X day was the 5th. So 10 days from the 5th. Well, that's tomorrow. Okay. What am I looking at? So tomorrow. This is where we are. This is what the stock looks like. Do we want to do this? Well, I have a few pretty stern rules. Rule number 1 is I don't want to be standing on a ladder reaching for the stars. Okay, I don't want to try to make new highs. Okay, so the high was this week, which is 2 days ago, 64.23. Do I really want to try to make another high? No. So I'm going to pass on this one. But just for the fun of it, let's take a look at the other software, see what the other software says. Now, it was UVV, right? All right, UVV. Hit go, see what it says. All right, there's some numbers I'm really not 100% happy with. Look at that, 31.49, average of 9 days. Do I really want to get a stock for 9 days? All right, here's the clincher. You ready? She closed at 62.95. The high for the year was 64.20. The low for the year was 49.95. I can deal with that. Nice high-low spread. What I don't like is right here, the 1-year target price of $59. It's a nice dividend, 53 cents, which is a 3.3% yield. I like that. But look at here, another clincher. Clincher number 2. 184,000 shares traded on a daily basis. No thanks. We're going to pass on that one. Well, I'm going to pass on that one. You guys can do whatever you want, but I'm just saying. Reset, get out of there. Okay, so I didn't like UVV. ROP. Okay, ROP looks like a sideways stock. You had the high of the year way up here, right around the end of December last year, and the low right there at the beginning of February. Last 90 days, she looks pretty good. Okay, has a low here at the end of October, coming into November. And there you go. Look at this. Remember I told you earlier, some stocks we have on election day and right after the election they drop. Here's one, 4 days in a row goes up. Okay, is election day here. Okay, 4 days in a row she goes up, and then she just keeps on going. Okay, right now she's at 186, and she's looking at a 35-cent dividend. That's almost a $200 stock, 35-cent dividend. I can almost tell you without even looking that the yield is going to be crappy. Okay, well, let's look at it. ROP. Okay, one thing I like about this is a bunch of ones. I like that idea. Okay, so you have a bunch of ones. I don't like that it missed a dividend in 2013, but look, it hits its dividend every single time on the first day, which is a good thing. It's a 30-cent dividend. I can deal with that. What I can't deal with, I have a little bit of time getting over, is if I'm stuck with this stock, if it goes down and I have to hold it, I'm looking at a 0.75% yield. Okay, so this reminds me a lot of MasterCard and Visa. They're great companies. They have ones all across the board, but the yield is really not that great. You have 0.75 yield and not even 1 million shares trading on a daily basis. It's got a great 1-year target because it closed at 185. It's a 1-year target of 198. That's almost a 5%. No, that's about a 10% move within a year. Okay, that's what they're projecting. Let's see what the Yahoo chart says, because Yahoo chart gives you an idea of what it was 10 years ago as to what it is now. Give us an idea of what we're looking at. Oh, come on, that's a wonderful looking chart. I was kind of hoping for something crappy, but no, this is a good looking chart. Okay, so 10 years ago, this baby was at 51, all right, 51.92, and now she's at 186. That's almost a 300% increase. Okay, so this is really tough decision. Now you guys got to figure this one out on your own. But let's check out the options. See what kind of options ROP has. Now, apparently they only have monthly options. Now, we had a couple of questions that we had earlier, this week, so we're going to go over those a little bit later on in the show because I still got a whole hour, another half hour to go. I like weekly options. This is a monthly option, so we're looking at 29 days out. So whatever move I'm going to make is going to be 29 days from now. What is this stock going to do for the next 30 days? I don't know. But if I'm stuck holding it, what was that showing me? If I'm stuck holding this baby, I'm looking at a 0.75 yield, and I don't like 0.75 yield. So just for the fun of it, let's come over to here. Let's put an ROP into the other software that you can get only if you're a member. And this is into January 5th, I believe it was. All right, I'm going to plot the dividend. Here we go. Love it. Ones. Gotta love it. Okay, so let's get rid of all that by just clicking onto the average. Now, this is another thing that's disappointing. I'm going to tell you why it's disappointing. Because it looks good. That's why it's disappointing. Okay, so you get it 10 days prior to, see, this line right here represents the dividend date. Okay, that's the EX date. So you buy 10 days before the date. Okay, what happens in 4 or 5 days? All right, so right here is 10. See the negative? Yeah, I can't really point it out because every time I move the cursor, it moves. The negative 10 means 10 days prior to. Okay, slide out here to the top. Right around 5 days prior to, she's going to go up a little bit. What happens then for the next 10, 15 days? She drops. This is on average. This is not every time. Then from there, she moves up nicely. And that's a nice move. So for dividend capturing, yeah, you buy it here, you hold it through, and about 2 weeks out, 3 weeks out, you're going to get your dividend. And then you're going to be able to sell it for a profit. Hold it for a little bit longer, and you get to get more money out of it. But again, let me reiterate. Even though everything looks great, the numbers look good, the charts look good, even the 10-year chart looked good. This is what doesn't look good. If you're stuck with the stock, if the stock drops and you don't want to take the loss and you want to just collect the dividend, the only thing you're going to be collecting is a 0.75% yield. All right, I'm going to get out of here because this is just disappointing me. Throw myself into a frenzy. All right, so we didn't like ROP, BANR. Again, now I'm going to tell you what I don't like about this. Okay? The high of the year was what? Today? Come on, really? The high of the year was today. The low of the year was way back in February, the second week in February. This thing goes basically sideways all year round. And then right up here, what is this? November 8th. Oh, God, I hate that crap. Anyway, November 8th, the election comes through, and what happens? The very next day, this thing shoots up from 44.99. She settles up at 5%. Yeah, it's $2. $2 and that is, yeah, 5% up. Okay, next day, she's up another 5%. Next day, another. Okay, anyway, she keeps going up from the election. The day after the election, this thing has climbed from $45 all the way to $55. Okay, 45 to 55. That's a $10 move. Okay, $10 move on a $40 stock. That's almost 25%. A 25% move just because of the president got elected. Now, do I want to buy this to collect a dividend? I honestly can't tell you. Let's see what the seasonality chart says. What does this thing normally do? She normally goes up at the end of the year. Okay, lovely. See that? This is where we are. This is where it's last. See? From there, it usually goes up. Okay, so let's get back to standard chart, and let's go look at the other software. Okay, BANR. Same day. Let's move over here to BANR. Let's plot the dividend on this one. Okay, this is one thing I don't like about it. There's only 4 years worth of data. I don't like that. But even with the 4 years of data, you get in, coming up to the dividend date, you might want to get rid of it before it goes EX because that's what the chart is telling you to do. If you don't, she's going to go sideways for a couple of weeks, and then she's going to go up. But it's only 4 years worth of data. I don't know if you want to trade 4 years worth of data. And if so, you have a 1.65% yield if you're stuck with it, and volumes on less than 200,000 per month and per day. And that don't make me a happy camper. So we can say no thanks to BANR. MasterCard, I can tell you right off the bat, MasterCard is going to be a tough call because it always is. But it always does what it's supposed to do. Okay, as a high at the end of October at 108. The low back first week of February at 79. And she's going sideways for the last 90 days. But look at this. This is a pennant. See this? Downwards, and then from here it goes upwards. That is a nice classic pennant, what it's called. So this, and they get smaller and smaller and smaller. See that? So basically that means this baby's going to shoot up or she's going to shoot down. So let's find out where she normally goes. Okay, go here. Normally on MasterCard it's usually straight up for the whole year. Look at that. It drops a little bit in January, then from the end of January it's almost a nice move up every year. That's great. I love it. MasterCard's wonderful. Okay, so let's go back to my regular standard chart and let's look at the other software. Okay. Now MasterCard usually always gives us ones across the board. And I say that because I've been trading MasterCard for quite a while. Here we go. 1 year, 2009, which is understandable, was problem, but other than that, it's been ones. Okay, let's get rid of that. It's just to the average. Okay, so she's basically going to go up a tiny bit coming into the dividend, dip down a little bit. So you might be able to catch that dividend, which is only 19 cents. It's a $100 stock, and you get a 19-cent dividend. And this is the problem I was telling you about. Although it looks great, okay, you might be able to catch that 19 cents coming into the dividend play. Get in, get your 20 cents, get out. Don't hold on to it. Because you get to the dividend, and what happens? She drops down for 2 weeks. After the 2 weeks, she goes up. Okay? Love it. MasterCard is a great company. Been around for a long time. Household name. Everybody knows it. However, look what they got for yield. 0.85. Now, I trade this one only because she gets ones all the way across the board. And 20 cents, that's an easy mark for a $100 stock. Okay, let's see what Yahoo has to say. The 10 years worth of Yahoo and the Yahoo Finance. Now look at that. So right now she's at 103. Where was she 10 years ago? 11. 11 bucks 10 years ago. This is why this one's a no-brainer. Okay, even though she has a crappy yield, 10 years ago she's at 11 bucks. Today she's at 104. Okay, that's nice. That's 10 times move. 10. Is it going to do that for the next 10 years? Don't know. Can't really say. But you get ones across the board. So this is what I do, even though I don't like the yield. I don't. And let's go to see what they offer. Because I'm pretty sure they have weeklies. Oh no, I didn't want to do that. Darn it, I hate it when I do that. Alright, let's go to trade. And let's hit MA. And I'm pretty sure they have weeklies. Love weeklies. Now here's going to give you an excellent idea for using the weeklies. Okay, she's at 104 right now. Okay. Now the bid is 104.30 and the ask is 104.60. Not a lot of space, not a lot of wiggle room. Okay, so what we could do, consider she's already in the 104. For one day, we can sell a credit spread. Okay, now I want you to pay close attention to this. We like MasterCard at the price she's at, 104. Now, 10 days prior to, which is tomorrow, she has a tendency to move up. Now, we're only looking to stay at above 104. Now, this is just a one-day trade. Okay, 10 contracts, 16-cent credit. What's going to happen is it's a credit of $160. However, it costs $30 in commissions to do the trade, so I'm only getting $130 out of it. All right. To do that, I have to put $840 up. So they're going to tie up $840 of mine. Okay, that's what I'm risking, $840 to make $130. So what kind of return is that? Let's quickly go to a calculator. Okay, so I'm making $130, and it's costing me $870 to make that $130. That comes to a grand total of 14.9%. So that's almost a 15% return for one day. Okay, it's not bad. All right, so what happens? What happens if she drops below 104? If she drops below 104, it means I have to buy it at 104. Okay? But if I'm buying it at 104, they're already paying me 16 cents. So my break even is going to be somewhere around 103.84, I believe it is. 103.84, yeah, right there. So the break even is 103.84. Anything above 103.84 is profit. Okay? So what I'm trying to say is, number one, we like the stock. We want to buy it anyway because we know it's going to go up and it's going to give us our dividend. The dividend's only 20 cents. It's not a lot. Okay? Now, she always moves up within that time frame, within the 10 days coming into the dividend. It's done so for the last 10 years. So we're in and out within 3 days. Now, this is a one-day trade. Okay? So you get 15% on one-day trade. However, if it goes against you and it drops below the 103.84, that's when you start losing money. You're buying the stock anyway, okay, and your break-even point is 103.84. Okay, then you can turn around and let's see what you could sell the 104 next week. The 104 next week is selling right now for $1.09. So that doesn't mean that's what it's going to sell for on Monday, which you're not going to be able to sell it for Monday anyway because Monday the stock market's going to be closed, so we're selling it for Tuesday. Then there'll be 4 days left. But what I'm trying to say is you're buying it at 104 if the stock drops below 104. So right now it's at 104.31, and we know she's going to go up a little bit. But if you're stuck with it at 104 at the end of the day, tomorrow, then come Tuesday, you're going to end up buying it at 104. And if you sell 10 contracts, that's 1,000 shares you got to buy at 104. So you better make sure you have enough money to cover that. Okay, so if you can't do 1,000 shares, do 500 or 400. See, 5 contracts will give you 500 shares. Okay? So however many you can afford to buy, that's how many contracts you sell. So at 1,000 contracts, at 1,000 shares, that's 10 contracts. Okay, so come Monday, we have a couple things, or Tuesday, we have a couple things that's going to happen. If this stock drops below 104 tomorrow afternoon, then come Tuesday, I have to buy 1,000 shares. Okay? What it's going to cost me? It's going to cost me $104 per share. Okay, 'cause that's what I'm agreeing to do. I'm agreeing to buy it at 104. Now, if I buy it at 104, the second thing I'm going to do Tuesday morning is I am going to sell someone the right to buy it from me at 104, which means I'm going to collect a premium, sell it for the exact same amount of money I paid for it, and hopefully somebody buys it from me at 104. If by chance next week it still stays below 104, I did collect the 16 cents for the put for tomorrow. I collect the 109 for the call for someone to buy it from me at 104 on Tuesday, and then 104 again. This is probably going to change because it's like 2 weeks of notice. Then it gives me an option to sell another 104 call. Okay, so I'm collecting 3 premiums so far, and we haven't even gotten to the dividend yet, because the dividend is in the first week of January. Okay, which is the first week of January is right here. Okay, so you got premium number 1, which is a 16 cent from the spread. Then you get premium number 2, which is the 104 call. That you sell the 104 call, give someone else the option of buying it from me at 104, the exact same price I paid for it, yet they give me more money. So it's like I'm buying it at 104, they're giving me $1. Okay, I've already collected 16 cents from Friday, which is tomorrow, and then Tuesday I collect another $1. And then if it still closes at below 104 that Friday, it means I still have to hold on to the stock. And then I turn around and I resell another option for someone to buy it from me at 104. And I keep doing that week after week after week until finally it goes above 104 on a Friday, and I can be out of that one. What's so bad about that? I bought it at 104. I sold it at 104. And I got in premiums. I brought in the premium for buying it and the premium for selling it. That's the beauty of the option. And worst case scenario, if I'm stuck with MasterCard, I collect the dividend, which is 19 cents, which I really don't want to do. I want to get in, I want to collect my little check, whether it's a check from a premium from the option or whether it's a check from the premium for the stock going up, collecting my 19 cents, getting rid of it at 104, 19 cents. Great, I'm all for it. Either way, I want to collect my small little chunk of change and move on to the next one. Okay, that's MasterCard for you. Now, we're going to wrap it up a little bit because we were talking about that's a credit spread in selling puts. Now let's quickly, because someone asked me about selling puts. I want to go over that for a little bit first. Let's get out of here. Let's delete that. Okay, so the stock right now is selling at 104.60. Now if I want someone to buy it from me, if I want to buy it from someone at 104, I could sell this one right here, which expires tomorrow, which is 19 cents. I can sell this, right? And then somebody pays me 19 cents, and I have to buy it at 104. That means if it drops below 104. If it stays above 104, I don't have to buy it, and that's like free money. Okay? If I want to buy it at 105, I could sell this one right here, 71 cents. Okay, because usually the difference between what the bid is and what the stock price is. The stock price closed right here, see it, at 104.31. See, 104.31, 104.31. Okay, you take 104.31 and you subtract it, and you get about 70 cents. So you're buying it at 104. Somebody's giving you 70 cents. Anyway, if I wanted to sell the put at 104. Collect 19 cents, then I end up buying it at 104. My cost basis would be 103.81. Okay, that means I own it at 103.81. I can turn around and then I can sell to someone the very next week at 104 and collect $1 premium, or collect a 20-cent dividend and move out. All right, one more question, and that had to do with trailing stops. I really think I should probably make a, what do you call it? a video to do a trailing stop. Okay, so once you have a buy order and a sell order, the sell order, you have a whole bunch of different sells you can make. All right, you have your market order, which is whatever the market is at the moment. Okay, so whatever the market maker says, that's the price you got to pay. That's what market order is. Limit is you're willing to pay a certain price, and that's all you're willing to pay. You're willing to sell at a certain price, and that's all you're willing to take. There is no good, bad, or indifferent. A stop is basically used for when the stock is going down. Like if the stock right now is at 104.31, which it is, and you say, you know what, if it goes below 104, I want to get out. That's my stop. So if it goes below 104.31, that's what you want. Stop limit, basically the same thing, but that's all you're willing to take. There isn't none. Now a trailing stop adds a parameter in there. Okay? First off, you're buying it. I can get rid of this one. That's just to confuse people. Oops, got rid of the wrong one. Let's do that again. Buy custom. There we go. Limit. Trailing stop. Okay. Now, I'm not going to tell you that I know this exactly, and this is what I use on a consistent basis, because I don't really use it on a consistent basis. I'm going to start using it on a consistent basis because I can see how profitable it is, looking at all the stuff. You have to, excuse me, I got the really sore throat, so this crutch is helping out a little bit. When you put your trailing stop in, it allows the exit point to move. So let's just say, hypothetically speaking, here's where you are. And the stock has a tendency to move up, and then it moves down. Okay, you want it to move up. And as the stock goes higher and higher, let's see if we can get a good point. Right here. So you get in here, you want to make sure you're jumping in. Okay, let's say you get in at 80. Look at these numbers right up here, the opening. Okay, let's say you get in at 86.95, and you want to make your profit. Now, this is an $86 stock, or it's a $100 stock now, but back then it was an $86 stock. And you want to be able to catch the upside. But if it turns and starts to go down, you want to get out. So how do you decide where your stop is going to be? Most people pick their entry point and they say, you know what, if thing goes up $10, I want to get out. That's when they set their stop limit. You know, hey, after $10, I want to get out. This one here, let's say you want to get a dollar move. So you get it at 86.95, you get in, and you know what? I want to get out at 87.95. That's your dollar move. Okay. Now, you want to give it some room to drop, to come down, because the stocks move up and they move down. So there's a spread between the high and the low. Now you don't want to make the spread too wide, because it may never hit it. You don't want to make it too tight, because you may lose the potential of it getting out. Okay, if you see the high of the day and the low of the day, okay, the high of the day is here and the low of the day is here. On this day here, the high of the day was 87.58, the low of the day was 86.65. What is the difference between those? And that will give you an average movement of how much that stock moved during that day. Same thing here. The high of the day, the low of the day. You subtract them and how much did it move? Well, to make things easier, there's that software. Right here. Here's the software. This is what you get in the email if you're a member. You get a stock symbol, you get the price, you get the dividend, you get the yield, and you get this number right here. What is this number? This is the 20-day moving average. Now, 20 days is basically 4 weeks, which is a whole month. Now, see the numbers: 1.4%, 1.5%, 1.5%, 2.3%, 4.11%, 3.15%. What do they mean? Well, I'm going to show you exactly what they mean. Here, on July 6th, this thing opened at 87.16, had a high of 87.58 and a low of 86.65. What does that mean? Okay, let's break out the calc. I don't even want to break out the calculator. I don't feel like doing that. My goodness. All right, you take the high of the day. You subtract the low of the day. And then that number you take and you divide it into the opening price of the day. And that gives you the percentage that stock moved during that day in direct relationship to the opening of the day. And that's where you get that number from. That's how much the stock moves on an average day in direct relationship to the opening. Now, you do that 20 times for the whole month of December. You say, okay, great, for the whole month of December, this stock moves an average of 1.41%. What does that mean? It doesn't mean anything. Okay, so let's figure it out. 69.86. 69.86 multiplied by, come on, 1.41. 1.41. Percent. 98 cents. That is the average move of that stock moved. It's a $69 stock. How much does it move on average in a day between the high and the low compared to the opening price? 98 cents. It saves a lot of math, a lot of figuring out. So, what I would do personally, I would take that number and cut it in half. So that's 45. 45 would be 90. Half of 98 would be 45, 46, 47, 48, 49. That's 49 cents. Okay, so here we go. I want to give it a 49-cent spread. 49. Okay, so buying it at market, and I'm selling it at market with a trailing stop. That means if this thing drops 50% of its moving average, then I'm out. Okay? But if she goes up, all right, let's go over here. Okay, so we get in at 87.16. Now 87.16. 87.16, and we're going to subtract that 49 cents, and that's going to give us 86.67. Now, is the low of the day lower than 86.67? Let's find out. 86.65. So we would have been out the very first day. Sorry, that's just the way it is. Sorry, I don't know what to say. Okay, so the next day, we're in the high that keeps moving up and moving down. Okay, she closed at 87, 81. I have to take a look at a one-day chart. How do I look at a one-day chart or a one-week chart? This is going to starting to get complicated. Okay, 11:45 is every 15 minutes. All right, you know what? Better yet, what I'm going to do, because this trailing stop is going to take a little bit more, because we're already into this for over an hour. Trailing stop is going to take a little bit more research to figure out how to best explain it and how to best use it along with the software. So we're going to end now, and we're going to cover up. We're going to do another video probably sometime between now and Sunday to go over the trailing stops to make it a little bit more clearer. Other than that, we are basically done for the day. I can't. My poor throat is killing me. Okay, let me see what this question I got before I sign off. If I buy a credit spread and you have to buy the stock, are you left with owning the stock and a protective put? All right, let me see if I can understand what he's saying here. Okay, why would you want to buy a credit spread? Because I was talking about selling the credit spreads. Okay, because we're looking at just collecting the dividends. I mean, that's basically what we're doing. We're doing dividend investing. It might be easier if I had, actually being able to talk to this person in person in order to figure out what we're saying. Because he's talking about buying a credit spread. Okay, so let's go jump back over to MasterCard and let's look at buying a credit spread, because I'd like to know which one is he talking about. Okay, we're here at MasterCard. Let's get out of here. All right, we don't want this one. Now, buying a credit spread. But which one would you be buying? Okay, we're back to the spreads. Here we go. Okay, right now the stock's at, let's go. Okay, so stock's at 104.31. And we're looking at a nice little movement for the next couple of days. What are we looking at exactly? This MasterCard? Yep, this is MasterCard here. All right, so 10 days prior to, we're looking at right here. Okay, she's going to go up just a tiny bit, but not by much. 44.9. So she goes from 40.8 to 45, just about before she drops. Sounds like a 10% move. Is that about right? Yeah, about 10%. Yeah, it's only like 5 points. No, it's only 4 points. Yeah, that's still 10%. Okay, before she drops down and then shoots up. Okay, so my assumption would be at the money credit spread. At the money credit spread would be right here, 49. But would you really want to buy that one? No, because that only has 1 day left to it. Okay, so if you bought this one right here, the 103, 104, bought it for 68 cents, the most money you're going to make is 32, which is not bad. Okay, so the most you're going to make is 710 bucks. Okay, because it's costing you 710 bucks, and the most money you're going to make is 320. That's almost a 50% if it stays above 104. Okay, that's a good idea. So if you buy this credit spread here, as long as the stock stays above 104, you're going to make 50% return on your money. Okay, come down to this one. You're looking at 19 cents. And most you're going to make is 90, is a $1.90. and you have to pay 840. So let's go, where's my calculator? 190, and it's going to cost you 840. See, that's better than my example. Okay, that's 22% if the stock stays above 103. Okay, so right there you buy that one, the 102-103 spread. You buy the 102-103 credit spread for 81 cents. Now you may or may not be able to get it at 81. Okay, you might have to pay 85. You might have to pay 90. I don't know, but that's what it's showing right now. But if you can buy it at 81, you're looking at a 22% return if the stock stays above 130 for the next week. Hope that answers it for you. Anyway, this is James, and we're going to be signing off now because I'm way tired. My throat is sore, but hope to catch you guys next time. Tuesday, I'll probably do another one between now and Tuesday just to get the bugs out because I'm not 100% sure. I'm happy with the way everything's going. So if you have any questions, just put them